Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Well, I'm good, but probably not as good as you will. I was expecting maybe some palm trees, a Hawaiian shirt, maybe a nice cool drink.
Well, we have a PFG shirt on, so kind of half beach vibe over here. But I'm currently on spring break from Ohio State. But instead of going to the beach, I decided to come to Missouri because why not? So came
Everybody goes
home.
to the beach. Why not be different and come to Missouri?
Well, my girlfriend, she actually flew in to St. Louis. We could spend last weekend together, but actually now she's down at the beach in Corpus Christi. So, I guess I'm there in spirit, So,
Very good, very good.
yeah. Well, then Ben, your spring break doesn't come up for another week or so after
Yeah,
this one.
we're Mizzou students. We've got 2 weeks. Yeah, end of the
Yeah.
month, into Easter.
Yeah.
This year, spring break falls over Easter for Mizzou students. So
Well, fun time there. Are you going to the beach?
I am not going to the
Well, see,
beach.
there you go. Can't give me any flack
I'm
then.
going to Indiana. I'm making a quick trip to
Hey,
Indiana.
that's just as good. All right.
Yeah.
So, talking about just as good, we did actually see some increases week over week across most of the grains complex here. So, I'm going to give a quick rundown. May 24 corn up 10 cents at 440. May 24 soybeans up 25 cents at 1180. Soybean oil on a cents per pound basis went up 1.42 cents at 46.59. Soybean meal by the short ton, sorry, on May went up $3.60 at 337.10. Both the May and July wheat crops dropped a little bit. That May crop down 18 cents at 546, July down 8 cents at 559, and then May crude oil down 83 cents a barrel at 77.34. So Ben, we did see a little bit of support come into the corn and soybean markets there, but some losses coming into the wheat. What's your takeaway looking at last week's movements?
Well, that wheat complex really prevented us from having a great bullish week, or one of the rare bullish weeks we've had in I don't know how many months.
Yeah.
It seems like we were on the downturn for a long time across the board, but nice to see a little bit of a rally in corn and soybeans. This is driven a little bit of kind of what we've been talking about for the last couple of months. Some short coverings in the corn and soybean markets. There's a little bit more that could rally, that could take place in those markets as well. And then that wheat contract, really that bearish tone in the wheat market driven by a cancellation of export sales. We've seen quite a few export sales cancellations in the last 3 or 4 days. So
Well, and just talking about that cancellation, notably China canceled quite a bit of soft red winter wheat. So looking at how that's impacting the shifts and obviously that laid into that downturn that we saw over the last week. Where do we go from here as far as the wheat market goes, trying to make up maybe some of that ground on the export market?
yeah, so the bullishness started middle of last week, or excuse me, the bearishness in the wheat complex started the middle of last week, as USDA went ahead and reduced the soft red winter wheat exports and the whole wheat US exports 15 million bushels in the March supply and demand estimates. And that was kind of reinforced when China came in and canceled 18.5 million bushels of soft red winter wheat just over the last 3 or 4 days. And so that probably signals that USDA could make another downward revision to wheat exports, just because we've seen, quite a bit of cancellation. There hasn't been new export sales in that complex to kind of offset those. And really, this is driven by China's getting all the wheat they want from their neighbor to the north, Russia. Russia has wheat and is exporting large quantities onto the market at pretty much whatever price they can sell it for, and that's always a dangerous combination for any commodity when you've got a major buyer or major producer like Russia is selling wheat at whatever price they can. So that particularly causes concern to the downside in the wheat complex.
Well, and moving beyond just wheat and talking a little bit about last week's USDA supply and demand estimates, we did see a slight downturn on some South American soybean production there. So within that, that added support back into the soybean complex and the soy oil complex in general. So I guess there were some positives and there are some positives moving forward. How do you expect that to continue as we look into moving toward the back half of March here?
Yeah, so the South America soybean adjustments were actually rather interesting. I would say that that was the biggest takeaway out of last week's supply and demand estimates, even more so than the wheat. The wheat is a little bit more tangible because it's here in the United States, but the South American soybean estimates were very notable. So the first one there is Argentina soybean production was left flat at 50 million metric tons. When we look at Brazil, we saw USDA come down just slightly from or down to 1 million metric ton to 155 million metric tons for the current crop. We expect that that crop's about 60% harvested at this point, so we have a pretty decent idea of what that yield's going to be. USDA has taken flack pretty much all year for being on the higher end of estimates. And they did again this time because the average trade guess was 3 million, almost 3 million metric tons lower than where they ended up. But the notable thing, and this is why I think this was such a notable revision in the March report, was USDA actually went back and increased last year's record Brazilian soybean crop again. And over the last couple of months, we've seen USDA increase that 2022-2023 soybean crop 5 million metric tons. And so more supply in Brazil that kind of feeds into those ending stocks categories. That's driven by how much exports they've been able to get out of their country, and cash prices kind of feed into that notion there. But this feeds into a concern I have maybe for this year and going forward is USDA has constantly been on the top end of expectations, and people have beat them off over the coals for it. But I think what we're seeing is I actually think we're seeing, and you're hearing rumblings within Brazil of this, that their acreage is actually larger than what was initially forecasted, or what many people believed ahead of time. And so when you have larger acreage, it creates for this surprise in production like what we're seeing. And so I would argue that even though we saw a little bit of a reduction in Brazilian soybean this month compared to last month, that Brazilian soybean number over the last 2 years has actually turned quite bearish again, and kind of reset the expectations of a bearish fundamental picture.
Well, and Ben, you mentioned that USDA was revising last week's, or not last week's, last year's crop and making it, adjusting those numbers to be even larger for that record crop than previously were provided there. So I guess looking at the reasoning behind that, what would be the motivation? Is it because that carryout is larger than we expected it to be? So then, USDA saying here, well, last year's crop must have been larger than we initially had thought.
Yeah, it's a combination of that plus what I said just a few minutes ago, larger than expected exports and lower than expected cash soybean prices. All of that feeds into this notion that, well, if all of that's checking out, soybean production had to be a little bit higher. And we've actually kind of seen a trend of these historical revisions in the soybean acreage number, which kind of feeds into this, theory that soybean acreage is higher than what we thought.
Ben, another thing that we've seen playing out over the last several weeks, we're looking at ethanol production, and it's consistently decreased. Or I say consistently, the last couple of weeks we've seen a downturn in the production of ethanol, and we're not quite on the cusp of that summer driving season yet or anything like that. We're still sitting here in mid-March. But what's that signaling to you, seeing that decrease in ethanol production? At this time, turning into the spring months on the calendar.
Sure. So even though we have seen a little bit of a decrease, I'll just remind folks that we were starting at very strong levels. We've seen probably for the entire month of February, or pretty close to the entire month of February, we've seen very strong ethanol or corn use for ethanol production. And so to pull back a little bit from that is maybe not all that surprising, because if you produce a lot of ethanol, eventually you're going to start weighing on ethanol prices. And we've seen ethanol stocks build some, but I'm not worried, I guess, that we're shrinking that corn used for ethanol number, or that ethanol production number on a weekly basis right now, because even at 311 million gallons produced a week, which is down from 317 million the week before, that's
Still a high
still
point.
well above where we were last year at this time. In fact, I'm looking back just real quick, that's well above where we've been. Well, I think you have to go all the way back to 2020. when we were having right before COVID, that was the last period when we really saw ethanol this strong, ethanol production this strong.
Ben, every time you compare anything to 2020, I'm like, wasn't that like a year or two ago? And I'm like, well, no, I guess it wasn't.
Yeah, 4 years ago. Yeah.
4 years ago.
Yeah, as a reminder, it was, at this time 4 years ago, COVID hadn't really taken a hold in, across the world and across the US. And so we were producing very strong. That year started out as a very, very strong ethanol year as well. And of course, we just whacked it when driving dried up. But that the beginning of that year started out very strong. And this year in 2024, we're very strong in ethanol. In fact, we're about 115 million bushels above the pace we need to be. I shouldn't say above the pace we need to be. We're 115 million bushels above where we were last year at this point. So very strong ethanol crush for 2024 so far.
Well, Ben, as we move through this week, what should farmers and ranchers be paying attention to that could move the markets?
Yeah, so we're sitting here on Tuesday recording this, and the CPI index just came out this morning. Just want to say a couple of things about that. The consumer price index, which is not the Federal Reserve's preferred measure of inflation, but it is a measure of inflation, came in at 3.2% in February compared to a year ago. That was slightly up from expectations of 3.1%, but the month-over-month growth of 0.4% was in line with expectations, but did grow compared to last month. And so, again, a little bit of heating up in that inflation market. We're going to get the preferred measure of inflation later this week on Thursday. So the producer price index comes out Thursday of this week. That's what the Fed looks at. It is still expected that we do not get a interest rate cut here in March. There's like a 1% chance of it, but so unlikely that we're going to get an interest rate cut here in March. We'll see what the producer price index says Thursday morning. Also, Friday, just a reminder, this is my public service announcement. Friday is the deadline to enroll in ARC County and PLC for 2024 crops. It's also the crop insurance deadline for summer crops. And we also get the National Oilseed Processors Report Friday at 11 Central Time.
Well, Ben, I think you missed the biggest event of the week coming up. You got St. Patty's Day on the horizon.
That's right. St. Patty's Day is coming up. I don't even know what day.
Is it Sunday or Monday?
Sunday. I don't remember. Yeah. I'm not Irish enough.
We'll forgive you for that one.
Thank you, Will. Appreciate it.
Ben, it's always a pleasure having your knowledge here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.